Welcome to the deep dive. Today, we're jumping right into the Grok Trade Market Summary. This is for Thursday, April 10th, 2025.
Yeah, hot off the presses, it covers the usual suspect stocks, the economy, even crypto and metals.
Exactly, the works. And our goal here is pretty simple. Unpack the big moves, figure out why they happen, without getting lost in all the jargon.
Make sense of the noise. The first thing Grok highlights, a major sell-off.
Major is right. We're talking multi-percentage drops across the board in the U.S. markets.
Yeah, the Dow Jones was down 2.5%, which, believe it or not, was kind of the best performer among the majors.
Which tells you something, right? Because the S&P 500, the NASDAQ, even the small caps, all down over 4%.
Over 4%. That's a significant broad-based move downwards. It really signals a shift in sentiment.
And volatility was high, too. Grok pointed out the NASDAQ 100 futures, the NQ, had this, massive intraday range.
Almost 1,400 points from the previous day's close. That's huge. It just underscores how choppy things were and, well, the importance of managing risk if you're trading this.
Definitely. So what was driving all this? Grok seems to zero in on the U.S.-China trade situation.
Absolutely. They specifically mentioned this immediate tariff increase to 125%. That's not a small tweak.
No kidding. 125%. That's got to raise concerns about inflation. Economic slowdown.
Both. It throws a wrench into supply chains, creates a ton of uncertainty for businesses, and yeah, that feeds into worries about prices going up and growth slowing down. Investors hate that kind of uncertainty.
Makes sense. But didn't Grok also mention some kind of temporary pause for other countries, a 90-day thing?
They did, yes. 90-day reprieve on tariff hikes for most other trading partners. So maybe a little breathing room there.
Okay, so a bit of a buffer maybe. But the main issue, the China tariffs. That's still the big cloud hanging over things.
That seems to be the main takeaway, yeah. The reprieve is short-term. The underlying friction with China feels more long-term, and that's weighing on the market.
So everyone's basically watching the upcoming economic data now, trying to see the actual fallout.
Precisely. How does this actually hit the numbers? That's the big question.
Okay, let's pivot a bit. What about crypto? Bitcoin didn't escape the sell-off, did it?
Nope. Sold off right alongside the stock markets. Grok noted it fell below $80,000.
And they mentioned something about resistance holding, a trend line.
Yeah, apparently a price level where Bitcoin had struggled before acted as a ceiling again, pushing it back down. They also mentioned it's in a falling wedge pattern now.
Right. For people who aren't chart gurus, what does a falling wedge usually suggest? Anything clear?
Well, it's a technical pattern. Sometimes it can signal that the price might reverse and head back up, but definitely not a guarantee. You'd look for other signs too.
Gotcha. So something to watch maybe. But what was really striking in Grok's report was the opposite happening with precious metals.
Exactly. Gold and silver actually saw significant increases. Gold even pushed to a new high in its current uptrend.
That feels like a classic flight to safety, doesn't it? Stocks are down, crypto's down, people pile into gold.
It certainly looks that way. Grok is highlighting that rotation, investors seeking out those traditional safe haven assets when turbulence hits elsewhere.
So wrapping this up a bit, what Grok's summary really shows is just how connected everything is. Trade tensions hit stocks.
And crypto follows suit while money flows into metals seeking safety. It's a global ripple effect.
And the key thing for, anyone listening is how these global events can directly impact your own investments, right? Your portfolio.
Definitely. Doesn't matter if you're in stocks, bonds, crypto.
Yeah.
These big macro events have consequences across the board.
Okay, so as we digest this news from Grok Trade, we saw a big downturn, volatility up, trade tensions as a key driver, and this clear shift towards safety in metals.
Yeah. And this brings up a really important point to think about. How does seeing this kind of market reaction fit with your own comfort level for risk, your own strategy?
Right. Does a day like this make you want to reevaluate how diversified you are or how you manage potential downsides?
It's worth considering, and maybe it raises broader questions too, about the interplay between, say, geopolitics and finance. How much does a trade spat actually move the needle long term?
Exactly. Something to chew on as you watch the markets unfold.